questions on it over the next several weeks. Okay? It's going to be a short lesson. If you don't get it, you don't really need it. If you do, and it adds to your trading somewhat, great. Doug, you already know, man. Get out of here. All right, let me turn on the ABCs for a moment so that I can illustrate this. All right, you can see I've turned on the ABCs now, EXTs, ABCs, etc. Blow up my 576 chart for a moment. These ABCs, they, you may have heard them called, I think it's Elliot Wave, something to that effect. It's just like a pattern that the market will go through as far as the pivots. You'll hear someone refer to a big C in the room occasionally. Basically, this is a trend trade, it's a bounce off of an area. They say big C, it's because of the relationships of these swings. Let me walk you through the ABC progression real quick. Any pivot you get at or beyond an outer band is going to be labeled EXT. No, it does not mean exit. No, it is not something that you can, it's going to pop up and magically you know that, oh, that's going to be the high or the low pivot, I'm going to go short or long now. It doesn't work that way. All it is it labels whenever you make a pivot, meaning this EXT right over here, before the market opened, would not have printed until the market actually made a push down and caused that to be labeled as a pivot. Okay? EXT starts it off. And the next confirmed pivot, we get back to the upside in this case, against that EXT, will be labeled an A. So we'll bounce up here, you see, there's our A. And then the next pivot down in that process, as long as we don't reach the outer bands again, as long as we don't take out the previous EXT, the next move down will be the B, A, B, C, just like that. So EXT, in this case, was from the upper outer band, it goes down, that's that swing down. We get a pivot up, forms the A. We get a pivot back down, it's labeled the B. If we get another pivot back up for this B, now again, if this B had gone all the way down and reached the outer band, the whole thing starts over again. Because it would have been another EXT pivot, a pivot at the outer bands again, okay? If that doesn't happen, the B takes out the A, meaning this swing right here exceeds this A, the low of it. If we get it bounce back up again, it's going to be this C. It'll be labeled a C pivot. Is everybody with me so far? Just in how what makes them print on the chart? It's a pivot out or beyond the outer bands, it's your EXT. The A will be the next swing against that. The B will be the swing against that. The C back the other way, okay? If the C pivot right here, notice how the C pivot goes all the way up, it exceeds the B, the high of this B right here, and goes all the way back up to the outer band. So that was it. There was no failure in there. And don't let the word failure throw you off. Fail means the ABCs, means all it means is the C didn't take out the B. That's what a failure is. Let me show you what that's going to look like. That's if we get one more pivot in there before the C takes out the B. It's called an ABC fail. And surely we've had one at some point. Here we go. From yesterday, same situation. We had the EXT at the top. Market comes down. We get a pivot back up. It's our A. We get a pivot back down. It's the B. The B takes out the A, so we get a C pivot back up again. Notice how the swing line up right here from the C pivot never took out the B. Like the example I just showed you. Didn't happen. We got to pivot back down before that took place. And it's labeled fail. So that's how that ABC progression works. Now, when someone refers to a big C, where I was trading a B short, where I was trailing a failure long, they're simply taking trades from areas and they're used to recognizing them in that pattern. Like this short right here at the open ends up being a failure short. Does that fail have a lot to do with anything else on the chart? No, it's just large triggers, resistance, the same areas you're used to trading. It just happens to be a failure pivot based on this ABC progression. Now the question I got was the big C. What do they mean by big C? Let me find a really good example of that. Well, I'll show you the one from today, and I don't think it was that great of one. I'll show you why. Not bad, just to get support here. The big C is when the B swing, like right here, if this B pivot exceeds the A by relatively little. And don't ask me to give you an exact number because I don't have one. I'm just talking about the B pivot exceeds the A by what, just a few ticks or so, not very much. The likelihood is that this C pivot, when it forms, will exceed the B. Think of it this way. If the B only goes down past the A a little bit, the C is not going to have very far to go to take out the B. It's likely to happen. It's going to have a shorter swing to take that out, so there won't be as big of a likelihood of a failure pivot happening there. There won't be as much space for it to happen. And so oftentimes when that'll line up with a mid-band or support, especially in a strong trending market, it's what they call that kind of that big C trend trade. If that happens to be a C pivot, has this little ABC progression, has an area, has a good chance of taking out that B to get to the next target. That's all they mean by that. Like here's an example, something else, say the B short. This is an example, it happens to be a B short right here. Now, did we need to know that that was a B to know that was a short trade over here earlier today, around 9:15 or so? No. We had a strong move down. We had a weak move back up. We had our large figures to trade down from. Small figures were down, MACDs were down, and down it goes. The B does not print until the price actually makes enough of a move in that direction to establish it as a pivot. So I doubt it would have printed exactly on that close. The market had to make a little more of a push down to say, all right, here's a pivot right here. Now, right over here, the longs we had around 9:45. This is why I'm not big on teaching the ABCs as much, because right here, notice, we had EXT up, we had our A pivot down here around 9:30. The B pivot comes back up and takes out the A. The B swing exceeds that A by a couple points. Wasn't just barely overrunning it, it went through it a good ways, where we got a C pivot back down. And the reason I hesitate to trade this is because I got a private message earlier saying, oh Jeremy, I saw that it's going to be a C pivot. I thought it was going to be a big C, and so I wasn't going to take the longs in here. And so instead of reading your indicators, what's most likely to happen, you know, people get caught up in, oh, that might be a big C here. The odds are that it's not going to be. The B exceeded the A by a lot, which means this C pivot has to come all the way back down here below 1027 in order for us to not get that fail pivot the other way, right? So it's not a big C. It's not likely to get all the way back down here and take out that B pivot. It's got a long way to go. And you've got stacked areas in here to get a bounce right back up against it. And that's exactly what happens here. We get that failure pivot, that bounce from our large triggers, the bounce from our fib, the bounce from our mid-band to continue the market to the upside. Quite a bit of information there, I know. Long story short, it's just the relationship of those swings. If it's a small B swing that exceeds the A by relatively little, and you're at a nice stacked area to trade with the trend, it tends to work out. Do you need to know that it's going to be a C pivot right there to know that, hey, I've got a stacked area and that there's some spot that can bounce and keep going for me? No. And that's why I don't have them on my charts. I don't really teach it as much anymore, or really at all, unless brought up. So at least now you have an idea of what people are talking about to say B long, B short, anticipatory failure, big C. It's just the nature of those that relationship of those swings.